FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's April 16th, 2018. As always, be a part of the show. Join us on the journey. The email address, kl@kerrylutz.com. So we had some interesting developments over the weekend, Syria, markets, etc. But before we go there, we have a question that I thought was a really good question. It came a couple of weeks ago. And it came from one of you by the name of Thomas. And here's the question, John. I'll cut it where appropriate. Many reputable people, such as Armstrong, Rogers, Harry Dent, stated that the U.S. dollar is the least dirty shirt in the laundry and will therefore go up in crisis, not collapse. But because obviously multinational institutional capital flow comes to the U.S., there's no denying that. And considering it's happened already in history, taking into account the importance of institutional capital flows, makes sense to me. But what would be John Rubino's, in parens, dollar collapse take on that argument? Thank you very much, Kerry. Love your show. Thank you for listening, Thomas. All right. So just let me restate the question. The concept being the U.S. dollar is the best-looking horse in the glue factory, while other currencies or currency blocks might be collapsing. That will cause the U.S. dollar to go up, at least initially, because that's where, look, you're a multinational company in Europe. Are you going to park your money in Deutsche Bank overnight, or are you going to put it with a too big to fail in the U.S.? That's really the question, John. What's your take?
Hey, Kerry. Well, let me start by saying all the fiat currencies are eventually doomed because they're all being mismanaged so outrageously. But the timing by which each one fails is still up in the air. It's completely possible that the crisis, when it begins in Europe or Asia. And that sends a lot of terrified money out of those markets looking for a home. And some of it flows into dollar-denominated assets. And that would give the dollar a pop relative to these other currencies in the short run. But that doesn't save us. And it also doesn't mean the dollar is necessarily going up versus real stuff. I think the place to hide out when everything starts to fall apart, or when big chunks of everything start to fall apart, would be real things rather than some other fiat currency. If the euro blows up, some money will flow into dollars, but it won't mean the dollar is quote unquote strong. It'll just mean these other currencies are weaker. So dollars go up relative to euros or yen or yuan. But dollars don't necessarily go up relative to real stuff. In a huge global crisis that could easily happen, let's say Italian banks implode and the ECB bails Italy out in its entirety, and that shakes confidence in the euro, and the euro starts to fall. In that kind of a world, do you want to be in some other currency, or do you want to be in gold and silver or farmland or really well-chosen real estate? And I would say that, even if the dollar goes up relative to these other currencies, the dollar will be falling in that kind of an environment relative to safe haven assets like gold and silver. So this is still a precious metals play, even if the dollar is strong in the short run. And then eventually, we've doubled the government's debt twice in the last 2 presidential administrations, and we're on track to do it again here. We're looking at $1 trillion deficits as far as the eye can see, while consumers are at record levels of debt, corporations are at record levels of debt. There's really no end to the amount of debt that we're taking on in the U.S. And the idea that we become then a healthy society just because everybody else is unhealthy probably doesn't work. We're blowing it just as outrageously as these other countries are, but they have some geographic problems that maybe we don't, because they're in more complex places, and we've got these 2 oceans protecting us. So in the short run, it's completely possible that the dollar does well compared to these other currencies, but it won't do well relative to real stuff.
It's like, you know what? It's the equivalent of you have a group of smokers. One smokes 5 packs a day, one smokes 3 packs a day, and the other smokes 1 pack a day. You think that guy smoking 1 pack a day is much more healthier than the others? Well, he might not be killing himself as quickly, but he's still killing himself. And that's what you gotta realize is no matter what happens, they're all in a race to the graveyard.
Yeah, they are. And trying to play one fiat currency that's declining against another fiat currency that's declining and figure out which one will decline more slowly is, that's a trade. You can do that, but you're still in fiat currencies that are declining, and it doesn't seem reasonable to place bets on an asset class that is doomed. You can look at the coal companies right now. And probably one coal company is failing more slowly than the other coal companies, but do you really want to bet on that coal company? No, you want to be in an asset class that is generally going up, that has its wind at its back. And in times like this, when currencies are being aggressively devalued by their governments, real assets have traditionally won out. You go all the way back to the Roman Empire, which had its hyperinflation, and then through, France in the 1700s and Germany in the 1920s, all of them had mismanaged currencies. And in every case, gold and silver did great, So I still think precious metals are a better place to be, although there could be some, multinational corporation stocks that go up and in real terms, not just nominal terms. And they're worth looking at too. But in general, stuff that depends on the value of a fiat currency like sovereign bonds will do less well or much worse than things that don't depend on somebody like a government keeping its promise. If something doesn't have counterparty risk, that's a more attractive situation in a world that's spinning out of control the way this one is. So, you could see Google go up, although that's not any kind of a guarantee in the kind of world that we're talking about. But you'll see gold and silver go up more, in my opinion.
Yeah, I think you are correct, John. I think there's a lot going on here, a lot more than meets the eye. It's hard to second guess everything. So probably what we always say about precious metals, it's the concept of the insurance policy. And, in the long run, you can be sure the government will always do the wrong thing and not act in your interests. So isn't it better to simply act upon that knowledge and really, just cover your bases, hedge your bets, because you can be sure that something not so good can happen here because the government's involved. We're not looking at this in a vacuum, John. Governments have a history of this type of behavior. And the government that has the reserve currency, it doesn't stay the reserve currency. How many times throughout history, going back a couple hundred years, have we seen the reserve currencies change? First Portugal, Spain, England, right? And now the U.S. dollar. I think I'm missing one or two in the middle there. But, the future timing of these events may be uncertain, but the fact that the government is going to mess things up, the fact that reserve currencies come and go, we've seen 4 of them over the past couple hundred years. There's probably even more than that. I mean, look, go back to Holland in the 1600s, Portugal, Spain. All these countries had their run at it. Now it's the U.S.'s turn. But again, probably you're going to see another break from the reserve currency of the dollar, but we don't know how it's going to unfold is the point. And, looking like at Bitcoin today, Bitcoin was down under $7,000. Right now, the price of Bitcoin is $7,900. So just last week, it's down around $6,000. Going to be bouncing around. They've got $1 billion more of Mt. Gox coins to dump. And my feeling is till it breaks 13,000 again, John, it ain't going anywhere. And 13,000 seems a bridge too far, but who knows? So it's going to be interesting because as a result of Bitcoin crashing, all the other kleptos have crashed as well. They've all crashed. And what does that tell you?
Yeah. Well, there's one theory that tax season was a big deal for Bitcoin because all the people who traded in the last year, at least in the US, have some kind of a tax consequence to that trading. And some of those tax bills are coming in huge. So they're forcing people to sell off their remaining Bitcoin in order to pay the taxes on the trades that they made during the year, and that's something that might go away after the 17th. And we'll see whether that's, removing that pressure lets Bitcoin take off again. I don't know. Trying to predict what cryptocurrencies are going to do, especially in the short run, is kind of a loser's game, just because they don't trade according to any kind of historical precedent that we can use to predict what they're going to do.
Exactly.
Where they end up is, I think, also anybody's guess right now, because governments are starting to regulate them in ways that lessen their attractiveness for some people. And governments, in fact, I'm writing a post right now about how establishments around the world are trying to protect their turf, and one of the things they're doing is ramping up the regulation of cryptocurrencies, but they're doing lots of other things, and they will continue to do more and more extreme things in order to protect, for instance, the monopoly that central banks have on the creation of money. These guys can create money out of thin air. It's a hell of a power to have. They won't give that up easily. And there's a story that just came out about how lab-grown meat is suddenly hot in Silicon Valley. Apparently the technology has arrived, and tons of venture capital is flowing into startups who are going to make chicken nuggets in factories instead of farms. And Big Meat is now lobbying the government to define meat as something that comes from an animal carcass. And so they're trying to protect their turf. But everybody is doing that out there.
I think I'm really disgusted. I mean, look, you could decide whether you like meat or not, vegan, non-vegan, whatever floats your boat. But meat is meat. It doesn't come from a test tube. And they at least should have to label it. So if you want to buy this inferior crap, maybe it'll even taste better. Maybe for 50 cents you'll think that you're eating prime aged filet mignon, John, but still, it ain't real. Probably they'll use 3D printers to make the stuff.
Well, what they're saying is that it's going to be chemically and biologically identical. It's going to be actual meat grown from the cells of cows and chickens and turkeys. Only it'll happen in a vat of medium that the cells can eat, rather than in the body of an animal. And the idea, well, conceptually, it looks a lot like solar power did 20 years ago. It's insanely expensive. There's no way it could compete today. Yeah. But it can scale. And if it starts falling in price exponentially the way solar did, then all of a sudden you've got a real competitor in the marketplace. And you can tell that the big meat companies are taking it seriously, because they're now ramping up lobbying to protect themselves.
Yeah, that's always a good indication. Mm-hmm. When the lobbying dollars start pouring in, something real is happening.
Yeah, so they apparently took a look at it and thought, I need to build my wall a little higher to keep this new threat out, which kind of implies that it looks like to them it could actually be a threat, which it's not today in any way. But 10 years from now or 20 years from now, it's going to be an interesting process to see how we accommodate something like that that's so radically new and maybe better. We'll see how it pans out nutritionally and environmentally and stuff like that. But right now, Silicon Valley loves it, and that's usually a sign that a technology has arrived, at least at the the proof of concept stage. So, a fun thing to watch going forward.
All right. Well, I'm still disgusted, but but who knows? Maybe they'll actually grow it, and it'll be cooked when you buy it, and it will never change. It'll never go bad, right? Ugh, I don't know.
Who knows?
I don't know. The process,
where this goes is unpredictable now, but it looks like it's going to hit an exponential stage here where it starts getting way cheaper and it becomes a factor in the next decade.
Yeah, well, it really wouldn't surprise me. But then if you're a vegan, what do you complain about? Because they didn't kill an animal to get it. So,
and
right?
If you're kosher,
yeah.
That's another thing where you're seeing headlines about this. Like if lab-grown pork doesn't come with hooves or from anything with hooves, is it kosher or not? This is going to be a lot of interesting
kosher bacon.
Like
kosher bacon.
Kosher bacon. Yeah.
I mean, that's been the holy grail of food producers for years, is to come up with kosher bacon, and we might finally have done it. Can you imagine that? Oh my God.
Yeah. So, but anyhow, my point in bringing that up is that the establishments out there are, for different reasons, on different timeframes, terrified of losing their place in the aristocracy. And the banking aristocracy is the biggest, of course. Yeah. And one of the things they're doing with cryptocurrencies is analogous to what big meat is trying to do with cultured meats. They're trying to protect their turf by changing the regulatory structure in a way that keeps the competition at bay. And so it'll be interesting to see if they can succeed at this, or if a new technology whose time has come will just swamp the regulators. And we don't know that yet, but that's another really interesting thing to watch.
Yeah, really. Yeah, it's they're having trouble holding up anyway. So now, now what do they do? They're being overwhelmed. They're being swarmed.
Yeah, I think the next decade we'll see the breakdown of a lot of these institutionally entrenched establishments. And the biggest one, of course, will be the fiat currency establishment. But, these military empires combined with cradle-to-grave entitlement states that a lot of governments have now, that they're paying for with fake money made out of thin air. Mm-hmm. Those things have to end. And the process of ending them, how does the U.S. and the global military empire that we have now, will we do that without a serious fight, or will we try to impose our will on the world militarily long after we don't have the power to do that anymore? Like, the petrodollar, for instance, is one of the big reasons that we intervene so aggressively in the Middle East, because that is one of the things that underpins the strength of the dollar. Mm-hmm. So we're apparently willing to go to war with Iran, for instance, to keep Iran from taking things other than dollars for their oil. Can we succeed at that? Probably not. But apparently we're going to try anyhow. The neocons think that we should just basically kill anybody who gets in our way. And, if we have to kill everybody and there's nobody left out there, so be it. If everybody else is dead, we will still be the preeminent power in the world. And maybe that's the best outcome from their point of view. And those guys are running things now, or at least they're advising Trump now. And he doesn't have a lot of other voices. So that's part of the instability that's out there now, is that we got guys in charge who don't see a problem with a war on 5 different fronts all at once, as long as we end up winning in the end. So I don't know, yet another reason to be in safe haven assets, because the geopolitical world is just as crazy as the monetary world. And when you combine those two things, you get volatility at a minimum. You get things bouncing around in ways that make it hard to sleep at night. So it seems like
you do.
Things that let you sleep at night are attractive assets in this world.
Things that let you sleep at night, definitely. And, it's hard to sleep with any, you're not sure with your kids what the heck's going on in life. But, anything that you don't have to worry about somebody doing something and blowing something up and screwing things up probably is a place where you want to be. So the Syria gets hit over the weekend. And the markets are up today, John. How do you figure that one?
Well, it's because they did it on Friday night. Governments love to make they love to do big things on Friday afternoon, after the markets close, because then there's 2 more days in which to spin everything so that the markets actually open in a favorable way on Monday morning. And they did that this time. They shot a bunch of missiles at Syria and Russia basically got out of the way, which was the big issue. Is Russia going to shoot down U.S. missiles So that we're in a shooting war with another nuclear power. That would have been a whole different day today if that had happened. But Russia basically protected their own assets, got out of the way. The U.S. shot their missiles, and then they immediately said, mission accomplished. We did what we wanted to do.
Done.
We sent that message.
We're finished. Goodbye. All right. Everything's done. Status quo antebellum, right? And
yes.
Everything is fine.
If we had ended up shooting at Russia and had Russians shooting back at us, the stock market would have been down 1,000 points on the Dow this morning. Gold would have been up $50 to $100 an ounce. And I'm sure that was part of the government's calculation, the U.S. calculation, that we didn't want that to happen. So they set this up to prevent that from happening. They're not currently shooting at people in Syria, and certainly not at Russians. The Russians aren't shooting at us. It's all over. Relax. They've done that with the trade war stuff too, where it gets really intense, and then Trump tweets, we're friends with China, don't worry. And then boom, there's no trade war anxiety in the markets, and the markets go right back up. That can't go on for very much longer either, because the up and down volatility has to be spooking people. Upside volatility is one thing. If your Google stock is going up 30% a year, you're not bothered by volatility. You want more of that kind of volatility. But if
that's
your Google
upside
stock
volatility.
but if there's downside volatility too, if yesterday Google was up by 30% and today it's down by 30%. Actually, those are extreme examples, but let's say 5 or 10%, which is still a lot of money if you've got a lot of that stock.
Could be down 30% in a month, though. They could do that.
Yes, you can do that in a month easily in these big volatile stocks. And so that's not fun anymore. Seeing a big holding drop by 30% means it's hard to sleep, knowing that that's happening, because if it did it this month, it could do it next month. So all of a sudden, you want tranquility with your money. You don't want volatility because it's up and down volatility. And that's what we got right now. So I suspect that's spooking a lot of people.
Yes. I mean, when you see the market go down 700 points in a day, the Dow, that's a pause for thought, isn't it?
Well, yeah, we're at the point now where if it's less than 300 points on the Dow, it's a calm day.
Yeah.
And if you just look at 2017, that was the most stable, tranquil stock market literally ever. We've never had a stock market go up as steadily as it did over the past year and a half. And people got suckered into thinking that that's normal because it had been going on for such a long time. And now we've got the opposite. We've got one of the most volatile markets ever. Yeah. And that has a big psychological impact on people because volatility is, in both directions is just scary and upsetting and anxiety producing. You aren't a happy, steady investor when you're seeing stuff like this happen. You want to take money off the table and put it somewhere safe. So I think that's part of why gold is starting to behave better lately. There's just a headline today that gold has tried 1350 13 or 14 times in the past 5 years, and it's bounced off of it each time. It's trying it again today, and eventually it's going to poke through and just keep on going. So that's out there, and I don't know if I would say imminent because who knows, but it's something that we'll probably see in the coming year. And the reason that it's going to poke through the 1350 and keep going this time around can be traced back to the volatility in the other financial markets. If stocks and bonds are behaving bizarrely and stressfully, then you start looking for what else you can do. And precious metals is one of the few things that you can do that imply less volatility in the long run. It can still bounce around in the short run, but longer term, it's held its value, whereas virtually no major equity can say that. You look at the makeup of the S&P 500 in the 1970s, and a lot of those guys aren't here anymore. They've just disappeared.
That's right. They are gone, and it's gone. And we're gone too. That's about it for today. So questions, comments, be part of the show, kl@kerrylutz.com. Hope we answered that question adequately in a way that you can figure out what the heck to do, because nobody else can figure it out either. So don't worry. And John's site, as always, dollarcollapse.com. Sign up to both our newsletters. John, we'll catch you next week, and happy trails for the coming week ahead.
Thanks, Kerry. You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.